This is the NASDAQ from today. It was actually very nice price action. And what we saw here in the move up here was a very nice respect of the 200 moving average and a retest of that. And then finally a price squeeze. That means when the price gets in a squeeze between the two moving averages and has to go into a direction either up or down. In this case it went up. I've been teaching my students to be very much aware of these respects of the moving averages and also the squeeze here. So this was a really nice trade. You could have put your entry here as soon as the last red got taken out and put your stop right underneath it, or even put the stop a little bit underneath the blue line, which would also give some space for pricing to go down maybe and take some stops here before shooting up. But anyhow, no matter where you put the stop, you could have entered here at the color change, and then you could have closed at about 89 points higher. So that was a really nice trade, and during the rest of the early of the day there was also nice possibilities. What you can also see is that during the time from 8 o'clock Danish time to 9 o'clock Danish time, we actually went through all 5 phases in the market. Phase 1 being when the two moving averages is together. Phase 2 is when the price has broken out from the narrow state. In this case it breaks down, and you can see the angle of the 20 moving average is about 45 degrees, and you can see here the price gets rejected immediately twice when it tries to go through the 20 moving average. Down here it gets rejected again even though it goes higher, and here you can see with force and power it shoots through, and now you get what's called an MA20 catch or MA20 hold, which is a really nice buy signal. So overall there was several good opportunities in the market today. I hope also that you guys caught some of these moves. I'm teaching my traders to be very much aware of the 5 phases as well. I don't know how much you guys know about the phases, but the phases are very important. And over here where we have the start of phase 2 is also called position number 1. And in this case that means as soon as we get a color change from green to red, we go short. But the further down we get, the more dangerous it's going to be until we get to phase 3, where the market tends to go sideways. In this case you could say if you made a short here on the color change here, I will draw the line in here, you would actually get stopped out if you put your stop over here. You would just marginally got stopped out. But this is how the market operates. Sometimes it stops you out and gives you an opportunity 1 or 2 or maybe 3 bars later, and thereby just telling you, well, you were a little bit too early. So if you got stopped out here on a correct color change, you got stopped out for, let's say, 26 points, 27 points, well, you made the entry here, because the thing is, you could say this is happening at or near the 20 moving average. This is happening near, but it's a little bit further away, and actually this pullback here is a little bit too tough. But anyhow, you still do the short here, you put the stop off here, and then even if you just take one bar only, you get 94 points. So that means if you lost 26 points here, you can survive by getting 95 points. I always tell my traders to count 2 or 3 bars before taking off the profits. So if you count 1, 2, 3, then the traders will take off the profit about 137 points from here. So really nice trade setup in the NASDAQ today. Thank you so much.